Hello everybody, welcome back. So we got the CPI yesterday, kind of worked out as we expected it would, at least the print, which was either on point or just below expectations, so smaller than expected. I mean, when it comes to all of this stuff, it is, for me, about following the price of oil, right? Imagine CPI is about 4, 5, 6 weeks lag to whatever inflation details have come through. So just look at the oil prices is normally the best way to do it. But, even though it was lower than expected, it had a bit of a negative effect on the crypto market. I think crypto is basically not really sure what it wants to do. As far as I can tell, it still wants to consolidate anyway throughout the summer. And remember, we're in August right now. So it's still summertime. It's not autumn. It's not winter. It's still summer. So we're still waiting for that summer consolidation to finish up. And we're obviously going to be vulnerable to whatever the rest of the markets do. But, with traditional markets, we're talking about S&P US 500, they're still sort of pushing up anyway. They're still moving up a little bit. We've also got a pump signal on the 4-hourly for the S&P 500 at the moment, or the US 500, the same thing. It's just the futures market. So, I mean, that's looking all right. The only things that are still struggling is the whole crypto side of things. So let's focus primarily on Bitcoin, and I put it on the Telegram yesterday after that move up. So we got the CPI print, we moved up, had a perfect retest of the 200 exponentials, basically a 4-hourly death cross. There's your death cross, there's your retest, and now it's a matter of sinking back down to where we started from, and maybe even have continuation. I was doing this throughout the last how many, I can't remember, so many weeks, maybe even longer. Always check your bias, invert the scale. What do we see here? So there's a first initial death cross. I've inverted the scales, by the way. Yeah, there's your first initial death cross. We ran into it, rejected from it, and then down. This time we've got a golden cross, moved up, down to retest it, and bounced from it. So that would be good if you were bullish, but unfortunately put the scale back to normal. That's a shame. It's actually the opposite of that. Now, it doesn't necessarily mean that this is where it's going to finish. It could continue down. It could go down to new lows. I would be looking for an area roughly, almost, to be honest with you, almost where we are at right now. I would honestly be thinking the bounce should be taking place immediately, and if we don't bounce from here, continuation down towards and below 55,000. So we've got sort of these areas here that we've seen some kind of response from, also these areas that we've seen some kind of rejection from. So it's roughly the bottom of this 4-hourly Bollinger Band as of this moment in time, 57,600. That's what we're looking for. Now, there isn't really any evidence to say that we're going to bounce from here when it comes to momentum. In fact, continuation in this downwards trend is probably the most likely, but it doesn't necessarily mean that it's going to break down from here, but we should see a response around this level. Whether that response takes you up to the top of the Bollinger Band center, about 59,600, so another $1,000 move, a couple of $1,000 move actually, and maybe we have a much bigger bounce that takes you back up to the death cross and hopefully beyond. But I don't really see any reason for a big bounce at this point right now. But if we do get it, it would be from this area. And again, just to highlight that area, 57,700, that kind of area. But by the time this video comes out and you've watched it, we've probably sunk down even further. There's no guarantees that anything's going to work from this level. So just to reiterate, the overall bias of mine is that we will continue to view all of crypto in the form of a giant consolidation, which is no different to how it's behaved previously. Put it on the log scale, turn the noise off on the total 2, reset the chart. This is our general expectations moving into next year. So I still very much believe in taking part in buying all this consolidation, as we should be over by, well, we'll call it October really, but we had a nice rounded bottom on the previous market throughout that summer period. We don't really have a rounded bottom at the moment. We've got one drive of hidden bullish divergence on the money flow index. It's not really enough. But I like the idea that we can still recover from here in dramatic fashion, but probably not today. Probably not today. This should be a plus for anybody who still wants to build a portfolio. Remember, nothing's changed. It's all still exactly the same. Everything is exactly the same. Right, so there's not much more to say. There really isn't. It's still very much a long dragging market, and yeah, we've been rejected on a death cross, which, you know, at this point now, you know, we've come back down to square one, and if we have continuation down from here, it's around about 55,000 area. But personally, a bounce at this exact level is likely. Whether it takes you beyond 59,600 is a different story, but we should be receiving a bounce as of this very moment, and that is all there is to say. Stocks look okay, yeah, and that should hopefully add to the idea that the trading environment is a little more secure than most people give it credit for. There's a lot of people calling for crashes and dumps and catastrophe, which is fine to call for that, but it's not exactly present on the chart right now. Right, I'll leave it with you there. Short video. Thanks for watching. Hope you have a nice day. Take it easy.